All right, guys, today we are going to talk about the acquisition of Microsoft buying Activision for $95 a share in an all-cash transaction. I'm going to get into the details. We're going to talk about who Activision is, why the deal makes sense, how they've had sexual misconduct allegations that drove the share price down and possibly created an opportunity for Microsoft to capitalize on. And we're going to get into how there could be some antitrust issues that may make Activision stock trade at a discount prior to the acquisition closing. We're going to get into Ross Gerber and how he sold it at a loss and now he's taking a victory lap even though he actually lost money on it. And lastly, we are going to talk about what people are saying on the internet. But guys, before I get into it, we are trying really hard to break down the hottest news in finance in a way that is easy to digest so you, the retail investor, can take it all in and understand what's happening. So if you enjoy this content, please hit that like button, subscribe, and ring that notification bell so we keep making these videos for y'all. Okay, so here's the details. Microsoft plans to buy Activision Blizzard, and based on the current share count of around 780 million, the deal values Activision Blizzard at around 74 billion. Now, once we adjust for Activision's cash position, it stands at around 6 billion, making the transaction a $68.7 billion acquisition price, which means that Microsoft's going to pay around $95 a share in cash, which makes for a 45% premium to the price per share before the deal was announced. Now, Activision in the last year hit a high of $104, which makes the deal sort of bittersweet for Activision shareholders. The deal makes Microsoft the number 3 gaming company in the world, which puts the company in a great position to go after the $175 billion gaming industry. It's Microsoft's largest acquisition of all time, followed by the LinkedIn acquisition of $28 billion in 2016. The transaction is one of the largest all-cash deals in corporate history, but it still pales in comparison to the 1999 purchase of Man is Man by Vodafone, which clocked in at $183 billion. If we adjust that for inflation to today's terms, that's around $284 billion today. But anyways, as you guys can see, I've spent most of my day studying nerd games when I'm just a cool dude who likes to drink Land Shark and talk about stocks like my hero, Shamath Palihapitiya.
Nobody cares about. Let's be honest. Nobody cares about what's happening to the Uyghurs. Okay, you bring it up because you really care, and I think that's nice that you care. The rest of us don't care. I'm just telling you a very hard.
Wait, you're saying you personally don't care?
I'm telling you a very hard, ugly truth. Okay, of all the things that I care about, yes, it is below my line. Okay, of all the things that I care about, it is below my line.
Disappointing.
Is it too late to edit that clip of me saying that Shamath is my hero? Okay, so who is Activision Blizzard? Well, they were created in 2007 when Vivendi and Activision agreed on a merger. Activision Blizzard is one of the largest gaming companies in the world with annual sales of around $10 billion. Over the last decade, Activision has doubled their revenue and tripled their cash flow. This makes for an annual growth rate of 7% for revenue and 12% for cash flow. The company's intellectual property includes many established and sought-after franchises, including Call of Duty, the Tony Hawk franchise, the World of Warcraft and StarCraft franchises, the Diablo franchise, and many more. Some of the company's products utilize a free-to-play approach wherein game upgrades can be purchased, such as Candy Crush. Some of the other titles, like Call of Duty, come with a one-time purchase price, and some of the other products, such as World of Warcraft, require a monthly subscription fee. All told, Activision Blizzard has nearly 400 million monthly active players across 190 countries. Okay, so you're probably asking yourself, from Microsoft's perspective, why does this deal make so much sense? Well, if we look at the cash flow multiples, Activision trades around 23, which is a heck of a lot lower than Microsoft's price to operating cash flow, which is a multiple of around 28. Microsoft is thus acquiring a company that's cheaper than Microsoft itself, making it an accretive acquisition. Microsoft CEO Satya Nadella tells us in the conference call, today 3 billion consumers around the world play games, and we expect this number will reach 4.5 billion by 2030 as new generations turn to gaming for entertainment, community, and a sense of achievement. We are seeing more players, more streamers, more titles, and more new game publishers than ever before. but too much friction still exists today between content consumption and commerce. So in short, Microsoft wants all those subscribers, they want all those games, and they want to make it easier and more accessible for everyone as the metaverse grows. And if you haven't been paying attention to Activision, there were some pretty large sexual misconduct allegations that came to light this fall. These issues came to light last summer when the company was sued by the California Department of Fair Employment and Housing. The lawsuit alleges that the company encouraged sexual misconduct towards female employees while also maintaining a frat boy culture. The lawsuit also alleges that the firm is discriminatory towards women in the hiring process. Well, the firm publicly stated that the allegations were false. 2,600 of the firm's 9,500 employees seemed to think otherwise, with them signing an open letter to demand change. Outcry was so large it led to a walkout in 2021, which culminated in a class action lawsuit by shareholders over the firm's failure to meet fiduciary duties. The issues from the allegations effectively resulted in 2 major titles being delayed last November, while sales forecasts fell short of expectations due to continued blowback. And we saw 2 former employees on Activision take to Twitter and tell us their thoughts. Cali Coast Replay said, Bobby walking out of the industry scot-free with the $800 million plus that represents his lifetime compensation after genuinely destroying evidence does not feel like a win for the 9,500 more poorly compensated people who made his games. I say indictment is necessary. And Jessica Gonzalez says, Bobby is now secure in his position for at least 2 years, the biggest wait-and-see union bust effort ever. We press on as if nothing happened. The course isn't altered over this news. And Jessica told the New York Times, we will continue to fight for improvement and stress proper employee representation. Now we got to get into the antitrust issues. From a political perspective, big tech is not in favor. Okay, all of them are under scrutiny, whether we're talking about Apple, Microsoft, Facebook, Google, Tesla, or Amazon. There is a perception that all of these giants have too much power. And from an antitrust perspective, we have to ask the question, will the deal go through? Thus, it's not really a risk-free transaction if you're buying shares of Activision expecting to get that $95 per share in cash. And just on Tuesday, the Justice Department and Federal Trade Commission announced a new effort to broaden how it should determine if deals are anti-competitive. Famous Australian investor John Hempton tweets, how knotted is the hedge fund community? Activision has an agreed deal for $95 from Microsoft. There is no reason to doubt Microsoft can pay. Antitrust isn't likely an issue. They may sell one title or two. Stock is trading $82.23. It is over 15% merger arb spread. And as with all stock news, well, Ross Gerber has to enter the conversation. He bought Activision in the 90s for his ETF, sold it after it went down 30%, and acted like he was an activist, telling us all that Call of Duty sucks. Today, after the announcement was made, he decided that he would celebrate by telling us Microsoft is now the most dominant in the metaverse with the Minecraft community and now Call of Duty, along with hardware and Xbox Live. I love it. Here's some of the reactions that I'm finding on Seeking Alpha. User Dockley tells us, this is a steal from Microsoft, basically buying the company at zero premium as before management issues. Stock was trading at mid-90s. Forget the metaverse mumbo jumbo. This company has great franchises and will be immediately accretive. The management change will help to retain and attract developers. There is nothing not to like here. It may have taken years for share price to overcome the corporate culture downdrift on share price, so everyone wins. Roblox is the metaverse play, but why buy a company with no earnings at an obscene sales multiple when you can buy a growing company at a fair earnings multiple? As I own Activision, I just wish that this was an all-stock deal. And user Marcelito tells us, Christmas came early for me this year, picked it up when it dropped to 66, just over some negative sentiments. The fundamentals are great. Knew I would make money on this, but so fast and so soon. Thanks, Microsoft. Okay, guys, here are my big takeaways from this transaction. First, I think that Ubisoft and Electronic Arts are now much more attractive companies to own because Microsoft just made a statement that they are ready to make big acquisitions. They want to enter the gaming space in a big way, and they're not afraid to throw some money around. Secondly, big tech is making a statement about the metaverse and the importance of focusing on these virtual worlds. It's going to be a thing, and it's going to be a theme that investors are going to have to start to get comfortable with, familiarize themselves with. And for myself, a small cap investor, I'm sure that there's going to be tremendous opportunities in this arena in the near future. Lastly, as for Microsoft stock, it is the second largest company in the world. At this point, if you're going long, I believe that you're going to have to expect more splashy acquisitions that are accretive, which won't be too challenging because the company trades at a pretty hefty price to cash flow multiple. So there's probably other accretive deals that they're going to be able to find. That being said, when you're this large, you got to question where the upside is. And we also got to wonder if at some point the FTC turns into a real threat. All right, guys, I sincerely appreciate everybody who watched this video. Please let us know what you think in the comments. Should you go long Microsoft? Should you just play the ARB on Activision? Should you go long Ubisoft or Electronic Arts? Let us know your thoughts in the comments. And lastly, please hit that like, subscribe, and ring that notification bell so we keep making more of these videos. Thank you, everybody.